Split profit method. This is a method which may be applicable merely to international transaction involves transfer of unique intangibles or in a multiple international transaction which are in interrelated to they cannot be evaluated separately by the purpose of determining arm's length price of transaction. Under this method, combine the net combine the net profit of the associated enterprises arising from the international transaction which is likely to be engaged in the first determination. The relative contribution of each associated enterprises to the earning of such combinations net profit has been evaluated on the basis of the function performed. The net employed on the risk assumption of each enterprise. The evaluation to be based on the basis of reliable external market data, which is indicate how such contribution would be evaluated by related enterprises performing comparable functions in similar circumstances. The combined net profit and its split among enterprises is proportionate to its relative contribution. The profit that appropriate to the assessee is taken into consideration in the arriving at the arm length prices and the reason to the international transaction. In the case of combined net profit, P from the first instance partially reallocates such enterprises so as to provide the basic return of appropriation in terms of international transaction which is engaged. This has been determined in reference to the market returns achieved in the similar type of transaction by the independent enterprises. Therefore, the residual net profit remaining after such allocation may be split among the enterprises of the C, D above. Such cases, the aggregate of the net profit allocated in the first instance, together with the residual profit appropriation, would be considered for arriving at the arm's length price of the international transaction. Transactional net profit method. In this method, net profit margin received by the enterprises from an international transaction owned unit in associate enterprises is computed here regard to cost incurred and sales effected or assets employed having regard to any other relevant case. Net profit margin realized by the enterprises or by the unrelated enterprises for a comparable uncontrolled transaction by applying the same basis of A as above. The margin is the profit margin is adjusted to take into the account of difference which is materially affect the net margin, profit margin in the open market having regard to international transaction and comparable uncontrolled transaction or regarding to the enterprises entering into transaction. If the net profit margin realized by the enterprises A above is established the same as the net profit A, then the same has been considered arriving arm's length prices of relation to the international transaction. Illustration. Andy's agency having a business in Malaysia's advanced loan of 160,000 MD in 1,50,000 to H Limited India. Andy's Limited. The book value of the total assets of Andy's is 125 lakhs and the loan is 120, it's more 50% more. This provide the software backup support of Andy's Limited. Andy's Limited spent 50,000 man hours during the financial year and for services rented by agency. The cost of the A&D is 75 man hour. So A&D is billed for 19 man hour per hour, but it is sold. And there is a Gamma Limited India, which is a similar business model, provides a software backup support by the Olive ANC and Penangka, Malaysia. Gamma Limited cost operation cost, direct cost 600 lakhs, indirect cost 200 lakhs, operation profit 200 lakhs. The calculate the arm's length price of the transaction in the Andes and Andes INC and INC based on the above data. Gamma Limited using technical transactional net margin method IMT is Swiss 45. Explain there is an adjustment to be made in the total income. AMD Malaysian dollars. Solution: the two enterprises are deemed to be associated enterprises, where one enterprise advances loan to constituting not less than 51% of the book value of the total asset of the other enterprises. In the case of Vandis AMC, the foreign company has advances loan to Vandis Limited, an Indian company, and such a loan constituted 57.6%, that is 45 into 1,60,000 that is over 1 crore 25 lakhs. We get that 57 percentage of this book value. Of the book value, total assets is Andes INC, Andes Limited was a lender deemed to be associate enterprises. Such transaction provides software backup support of Andes Limited to address the international transaction between the associate enterprises and provisional transfer pricing would be attached in the case. Determination of an operating margin of transaction, provision of software backup support by the Andes Limited and Andes INC. Billing per hour, that is 90.5 into 45 hours, 45 rupees is 4,000. and the cost per minus $75 into 45. So operation profit per man had 700 rupees. Operators 21% profit. Determine the cost operating margin of comparable to uncontrolled transaction. That is provision of software backup support. It is direct cost 600, indirect cost 200, total cost 800, operating profit 200. So operating profit is 200 into 800 is 20%. Compute the arm length price of the provision of the computer backup software provided by the Andes and cost of Andes per annum 75 into 45 3375. Arm length operation is 25 percentage of that is so 835 rupees plus arm length transaction is 4281. Arm length price of the total man hour spent by the Andes is 70,000 hours into is 21 lakhs. 9,000, 3,000, 37,000, 9 lakh 37,000 to be added to the profit. Okay. The arm's price of total mana spent by the Andes provided by the backup is 21 lakhs. Actual mana billed is 21 lakhs. Arm adjustment to be made to total income of Andes is 67 lakhs. 57,000. Other method to be prescribed by CBDT. Okay. And the other method allowed to use any other method taken by the account. The price of the price which has been charged or paid or which would be charged or paid for the same or similar uncontrolled transaction with or between non-associated enterprises under similar circumstances. The various data which is possible to use for the comparable purpose under this method, which is the third-party quotation, evaluation report, tender, bid documents, document relating to negotiation, standard rate card, commercial and economical business model, etc. Method of computation of ALP, ALP section 92C, arm's length price section cup method, resale price method, cost plus method, profit split method, or transaction method. Cup method. This method is applied where there is a similar transaction between unconnected person. Identify the price in the comparable uncontrolled transaction. Adjust the price of the material difference in terms of contract, credit, and transportation. Adjusted the price of arm's length prices. In the case of resale price method, the method is applied where an item obtained from an associate enterprises and is resold to unrelated party. Identify the resale price and at which the items resold to unrelated party. Reduce the related party by the normal resale price of the normal by the normal gross margin cross profit or CUPT cup, that is uncontrolled comparable uncontrolled transaction expenditure incurred in customs only with respect to purchase. Adjust the price from the functional other differences material effect of the gross profit margin in the open market. Adjust the price of arms and prices been occurred. Cost plus method. This method is generally applied when the semi-finished goods are sold to an associated enterprises. Identify the direct and indirect cost of the production incurred for the property transfer of the service product by the associated enterprises. The determination of the gross profit markup to the cost of the unrelated, uncomparable, uncontrolled transaction adjusted to the gross profit markup for the function and other differential material affecting the gross profit markup of volume. Total cost is increased by adjusting the markup is equal to arm's prices. Profit split method. This method is applied where there is a transfer unique, intangible, or multiple international transaction determine the combination of NP and associated enterprises arising out of the international transaction. Evaluate the relative contribution of these enterprises to earning the combination of net profit basis of FAR. Split the combined NP among the enterprises proportion to market return and the resident profit proportion to their relative contribution. Arm's prices is determined on the basis of profit appropriation. Transaction net margin method. The compute the net margin margin of enterprises of international transaction in the associated enterprise having regard to the cost incurred related sales referred to the assets employed. Compute the net profit margin released by the enterprises of the unrelated enterprises of CUCT. CCT is comparable uncontrolled transaction. comparable uncontrolled transaction. This is supplying the same basis and adjust the net profit margin to relate to the comparable uncontrolled transaction with the accounts of difference affecting the net margin of the other members. And when I compare the net profit margin relating to the cost, sales, asset of the associated enterprises with the net margin margin, controlled party, and comparable transaction, adjust net profit margin taken into the account of arriving the LP. Determine the most appropriate method. Rule 10C deals with determining the most appropriate method. Under the rule, the method which is best suited for the fact of circumstances which provides a best suitable measure for the arm's length price in relation to the international transaction which is considered to be the most appropriate basis. For the purpose of selecting the most appropriate method, the following factors to be taken into account: the nature, the class of international transaction, the class of associated enterprises enter into transaction or function performed by them, taking into account of assets employed or to be employed in the risk assumption of such enterprises. Availability, coverage, reliability, data necessary for application of the degree of comparability existing between the international transaction and uncontrolled transaction between the enterprises and entered in transaction. The extent of which reliable, accurate adjustment can be made to the extent of difference, if any, between the international transaction and comparable uncontrolled transaction between the enterprises entering into transaction. The nature, extent, and reliability of assumption required to be made in application of made. The manner of computation of the arm's length prices adjusted to international transaction and specific domestic transaction under section after 1st April 2014, third provision of 92C. In the case of international transaction, specific domestic transaction undertaken by after 1st April 2024, where more than one price is determined by the most appropriate method, the arm's length price can be computed in the prescribed manner prescribed with the Rule 10C. Computation of arm's length prices attained 10C. Determination of arm's length prices using one of the prescribed method. A price is determining the arm's length prices. Whether the single prices arrive at price of determining arm's length, yes, then no problem. If no, the range, as per the range concept, if the prescribed conditions are satisfied, covered in the later sections, are applied by the arithmetic mean or any other cases. Section 10CA provides that where the respect of the international transaction or specific domestic transaction, the application of the most appropriate method referred to Section 92C, resulting in that determination of more than one price, then the arm's length price with respect of such international transactions or specific domestic transaction has been computed on the basis of data set constructed by placing such prices in ascending order or provided by Section Rule 10CA. And application of multiple year data for construction of data set. NCE provides that the respect of international transactions, specific domestic transaction application of most appropriate see result and application of the as arm prices respect of international transactions, specific domestic transaction has to be computed on the basis of the data set constructed by placing the prices in the ascending order under Rule 10C. An application of multiple year data constructed of the database. Multiple year data allowed in the case where there is a determination of the output prices that being the TNMP, RPM, or CEPM. Data is used to analyze the comparability of the local transaction with the international transaction. The data to be used to analyze the comparability of uncontrolled transaction with the international transaction should be related to the financial year in which international transaction has been entered into. In the case of most appropriate method determined by the arm's length price of the transaction entered into or 1st April 2014, the resale price method or a cost plus method or a transaction net margin method, then the data is to use for analyzing the comparability of uncontrolled transaction with the international transaction should be data relating to the current year, data relating to the financial year, immediate preceding current year. If the data is related to the current year is not available at the time of furnishing the return of income by assessing for assessing year relevant to the current year. However, from the data is relating to the current year is subsequently available at the time of determining the arm's length prices. Having international transaction during the course of any preceding assessment year for the assessment year in which such data shall be determined in respect of the data is not available for the time of furnishing return of income of the relevant assessment year. For the data relevant to the current year where the comparable uncontrolled transaction has been identified, enterprise understanding the said uncontrolled transaction or not being enterprise understand undertaking the international transaction specific domestic transaction referred to subtraction has been either good naturally immediately preceding current year undertaking the same simple comparable to uncontrolled transaction there. The most appropriate method is used to determine the price of the comparable uncontrolled transaction undertaken before said period and the price is respect of the uncontrolled transaction has been determined. The weighted average of the price is computed in accordance with the manner provided in subtotal. In a comparable uncontrolled transaction undertaken in the current year, the aforesaid period pertaining to which include a data set instead of the price referred to clause 3. Further, where there is an comparable uncontrolled transaction is identical the basis of the data related to the financial year immediately preceding financial, and the enterprise undertaking said uncontrolled transaction not being the enterprise undertaken the international transaction or specific domestic private transaction has been a financial year immediately preceding such financial year sales in comparable controls. The price in respect of such uncontrolled transaction shall be determined by applying the most appropriate method in similar manner as applied to determine the price of one comparable uncontrolled transaction undertaken to financial year immediately preceding current year. The weighted average of the price computed in accordance to the manner providing by subgroup 3 comparable uncontrolled transaction undertaken the first period. 2 years shall be included data set instead of the price subgroup. In the case where there is a data is related to the current year determining average price subsequent to the time of assessment of the established, the enterprises has undertaken the same or similar control transaction during the current year. The uncontrolled transaction undertaken by the enterprise in the current year is not comparable uncontrolled transaction. Then irrespective of the fact that such an enterprise has undertaken comparable uncontrolled transaction in the financial year immediately preceding current year or the financial year immediately preceding such financial year, the price of the comparable uncontrolled transaction or a weighted average of the prices of the uncontrolled transaction. And in such case where the established shall not be data head. The rule 10C-A33 provide that where an enterprise has undertaken comparable uncontrolled transactions more than one financial year, then the purpose of construction of the database, the weighted average of the price of such transaction could be computed in the following manner. The method used by determination of the price, the manner of computation of the weighted average of the prices. The resale price method, by assessing the weight of the quantum of sales which has been considered by arriving at the respective prices. Cost method, assessing and weight to the quantum of cost which has been considered for arriving the respective prices. Transaction net margin method, by assigning weight of the quantum of cost incurred or the sale effect or asset employed or by the employed or by the case may be other based on this considering arriving at respective prices. Range concept, rule 10CA4 provides that where the most appropriate method applied is method other than the profit split method and the method prescribed by the CBET under the section 92C1D or F, and it has a constructor in accordance with the subroute 2 consists of 6 or more entries. Long length range behind from the 35th percentage of the database and ending with the 65th percentage of the data set would be constructed. The price of each international transaction of the enterprise specified domestic transaction has been actually been undertaken within set range. Price of international transaction or specified domestic transactions are actually being undertaken should be deemed to be arm's length price. If the price of each international transaction or specific domestic transaction is actually being undertaken in outside the said arm's length range, and the arm's length price transfer will be taken as a medium of data set. Section rule 10CA6. When applying the range concept, the most appropriate method selected in comparable uncontrolled price method and resale price method, cost plus method or transaction net margin method, and the data set constructed has 6 or more entries. Notably, arrange the value of the data set in ascending order where the actual transaction price falls within 35th to 65th percentage of the data weight. The value of transaction is accepted to be arm's length price. Where the transfer price does not fall in the above range, then the PD of the data set shall be taken as an arm's length price. Range concept not applicable. In the case of the provision of rule 10CA+4 is not applicable. The most appropriate method is a profit split method or another method a data set has been less than 6 entries. Arm's length prices shall be arithmetically means all the values including the set. However, if the variation between the arm's length price so determined the price has been international transactions or specific domestic transaction has actually been undertaken does not exceed such percentage, not exceeding 3% of data, as may be notified by central government in the official gazette in the price of which international transaction or specific domestic transaction has actually been undertaken shall not be deemed to be arm's length prices under rule 10CA7. Meaning of certain terms and meeting the 35th percentage of the data set. set having a value arranged in ascending order. The lowest value of the data set, such as at least 35th of the value, so 33% of the value including data set, is equal to the said value. However, the number of values are equal to or less than aforesaid value, the whole number, then the 35th percentage shall be the ascending arithmetic mean such a value of a value immediately succeeding it in the data set. The 65th percentage of the data set having value arranged in ascending order. The lowest value of the data set said that least 65th of the value including data sets are equal or less to the value. However, if the number of values that are equal to or less than the aforesaid value is a whole number, then 65th percentage shall be arithmetic mean of such value and the value immediately succeeding the data set. The median of the data set means the lowest value of the data set which at least 50% of the value included the data set are equal to the less of the value arranged in the ascending order, and to having the number value that are equal to or less than aforesaid value in a whole number, and the median shall be arithmetic mean of such value and the value immediately succeeding the data set. Comparable analysis. The comparability of the international transaction with the uncontrolled transaction is judged with reference to the following factors: specific characters of the property transfer or service provided in either transaction, the function performed taking into account the assets employed or to be employed, and the risk assumption by the respective parties of the transaction. The contractual terms, whether or not such terms are formal written or the transactions laid on explicit, implicit, or how to responsibility, risk and benefits of the divided between the respective parties of transaction. Condition providing the market which the respective parties to be transaction operates, including geographical location or size of the market, the laws and government orders in force and cost of labor, capitals in market, overall economic development, and the level of competitors where the market as wholesale or retail sale. As per section 10b3, uncontrolled transaction should be considered comparable to the international controlled transaction only if there is no material difference in the terms of function as a service between the transaction being compared with enterprises entering into this transaction. Such would materially affect the prices or materially affect the cost charged or materially charge the paid or the profit arising from this transaction is open market. In fact, it provides the case, but there is such a material difference. Reasonable accurate adjustment should be made and eliminate such a material difference in order to compare controlled and controlled transaction. The comparable uncontrolled transactions two types: internal and external. Comparable uncontrolled transaction, internal comparables and external comparables. Internal comparables, these are the comparable transaction between one of the parties to the controlled transaction, taxpayers of the R or the associate enterprise, and the Indian and third parties. And these comparables are considered a issue of comparables. It is likely to that functions as a risk analysis of the FAR analysis of the function as a risk analysis. This comparable transaction would be similar, that is uncontrolled transaction, due to the involvement of common entity to the same two transactions. Even though the internal comparable may offer a higher degree of compatibility, there's a need of rigorous scrutiny like external comparability, and suitable adjustment might be made wherever necessary. External comparable. There is a comparable transaction between two independent parties, neither of which parties is a controlled transaction. Generally, the level of comparability offered to the external comparable is not precise as internal comparable. However, external rule is not absolute. For instance, it may so happen that the entity offers a certain variation of product exclusively of a associate enterprise, slightly different variation to the unrated party. In such kind of situation, the preference should be given to the external comparable involving identical products, identical contractual terms, and accepting the internal comparability. Comparable uncontrolled price with an associate price to associate enterprises, associate price to the unrated party, unrated party to associate enterprise. Transaction 1 to transaction 2, transaction 3, unrated party to unrated party, associate enterprises to unrated person, then associate enterprises to associate enterprise 2, then unrated person party to associate enterprises, also unrated party to unrated party. These are kinds of 5, 1, 2, 3, 4 transaction. In the above party transaction AE1 and AE2, that is associated A1 is subject to transfer pricing, and AE1 and AE2 party is a control transaction. Transaction 1 and 2 are internal control transaction since this entered AEs or with unrated parties. Transaction 3 is an external control transaction since between the unrated parties. The process of identifying and selection of external comparables. Whenever the internal comparables available, preference should be given to internal comparables. The process of identification of the price. However, in the absence of the same, the recourse has been taken to search of external comparables. The transfer pricing legitimate in India does not prescribe the particular process of selection of comparables. However, various decisions of the judicial authorities has provided genuine as to how to carry out the process based on the data available in the public domain. These major steps involve such a search process and discuss the here. Construction of database. Database is a domain of information, financial, non-financial, for companies to maintain, organize in a manner so that facility easy search of data, also applicable for the relevant filter. Some of the commonly used database in India are Capitaline plus Capitaline DB. This contain a database over 35,000 companies are included information of public, private, cooperative, joint sector companies. This is the Probus. The Probus is a database of financial performance of Indian companies, audited annual reports of companies, and information submitted to MCA. In this case of Asian companies filing a stock exchange and prices of the securities listed on the major stock exchanges, non-bill sources of database. This database contains information on all listed companies and largest set of unlisted companies. ACETP database. ACETP database contains information both financial and non-financial company sector. This also contains information regarding equities and commodities and descriptive markets. There are the available Indian foreign database too, like Progress Pro, Amadeus, Royalty Stat, Camsu Stat, Globus, Odysseus, KT Mine, Orina, Bloomberg, etc. This can be different. This application of a qualitative filter helps in filtering the companies available in database based on the similarity of quantum information between the tested parties and political comparables. Some of the commonly used quantitative filters are available for financial data. The companies whose financial information of the relevant periods the companies with financial information of the relevant period financial year of the control transactions are present to use in the case of me or not available in public domain should not be considered as a comparable analysis. Industry of the tested party. The appropriate test industry head should be selected. For instance, the tested party operates as C sigma. This should be ensured that the various industry heads to be made include comparable companies you choose, that is trade, agriculture. There should be applied the filter and parameter should be fairly proper. The turnover filter. This is perhaps the most commonly used quantitative filters of a search process. This is a reason for companies operating in the same range of turnover, but with similar share of the market and those more like to some who are similar margins. On the other hand, companies with extremely high and low turnover would not provide an effective basis of comparison since the margin would not reflect the effectiveness of the business. But scale of operation, the range of the filter is a range of the filter it is very subjective and varies with the fact of each case. Net worth filter. Net worth of the company can be used to determine the net worth of the company. Negative net worth would be indicated at depth if the company has suppressed asset. Therefore, the company with the consistent negative net worth should be rejected in the considerability of analysis since the margin would be adversely affected and it would ordinarily difficult to qualify and adjust the effect of negative worth at the margin. And the companies with negative net worth are usually rejected in this filter. Export filter. The parameter of global geographic location of market has led to adoption of export turnover filter wherever transfer pricing office STPOs insist if the taxpayer is an exporter, then the comparable should also have an export earning or certain degree. Export activities levels by itself cannot be valid filter unless it is established that the market of the exports are made and material difference of the domestic market. Employees expense filter. Employees expense ratio helps analyze the level of activities and intensity of the employee dependency. Transaction. As a result, alternative discuss the transaction between two related parties cannot be taken as comparable and controlled transactions for the purpose of benchmarking. The controlled transaction. The filter defined in applicable of the same principle, that is a potential comparable and substantial related party transaction. It can be inferred that margin are contained with the transaction which are not entirely governed by the market focus, and thus such a company should be rejected as much more. Consistent in loss making companies. The companies which are incurring loss on a consistent basis cannot be considered as a good comparable, as this profitability in adverse impact by factors which are not specified to the industry but to the entities. However, the loss in just 1 year should not be indicative for the extraordinary factors surrounding the company, and therefore such company should not be rejected as accountable. Step 3. Application of qualitative filters. And the entries remaining after the application of the qualitative filters are further narrowed to applying the qualitative filter. Some of its commonly used qualitative filters are product filter, function filter, and ownership filter. Product filter. Although the industry filters excludes the companies are not operating in the same industry, but at the same time there are the entities producing a variety of products of the industry. Therefore, the order to reach a precise measure of comparability, list of companies should be further shortlisted to exclude the companies not dealing with the same and similar product. As for the tested parties, for instance, the tested party trading in the sea, the industry filter is to be applied on the agriculture. However, the filter might result in the company engage in various type of agriculture products like fertilizers, pesticides, etc. In order to remove this, product criteria should be applied and only select the companies engaged in trading seeds in agriculture industry. Function factors. Choose the companies must be further analyzed and select these companies which are functioning similar to the tested parties. The functioning should be from manufactured goods, rendering services, trading in goods. Thus, a filter is to be applied depending on the function performed by the tested party from the transaction which is functionality similar. Ownership government party. Generally, entities in the private sector exist for generating profit. The government-owned entities, on the other hand, function to serve society, are not necessarily driven by the profit motive. According to such companies should be exclude based on the comparability analysis of these other private companies. Reference to the transfer pricing officer, section 9 to see the section provides a procedure for reference of transfer pricing officer and issue relating to the computation of the arm's length prices in the international transaction procedure. The option to make reference to a transfer pricing officer given the assessing officer, but assessing has entered into an international transaction to then read each assessing officer concerning is necessary to or explicit to do so. He may refer to the computation of arm's length prices relating to the said international transaction or TIPO. This option is not, however, available to the assessing officer to take an approval of principal commissioner of income tax and commissioner of income tax on taking such reference. Any joint deputy assistant commissioner of income tax authority by CBCC can be appointed to TPU. When such reference is made, TPU can serve a notice of assessee required him produce a date specified to any evidence in which assessee referred to support of computation of arm's length price made by him in relation to the international transaction. TPO can also be determined arm's length prices for the international transaction, identifying subsequent course of proceeding before him, and the transaction is referred to transfer pricing officer, assessing officer, section 92C. With respect of international transaction, assessee has not furnished a report under section 92C. Such a transaction comes to the notice of transfer pricing officer during the course of proceeding before him. The transfer pricing provided shall apply such as if such transaction is referred to transfer pricing officer under section 92C of subsection 2B. The transfer pricing officer has a pass on order determining the arm's length prices after considering the evidence, documents, etc. provided by the assessee and other consideration of material gathered by him. He has to send the copy to the office order to assessing officer as means as assessee. The order of the transfer pricing officer determined by the arm's length price of the international transaction is binding on the assessing officer, and the arm's length officer has a procedure to compute the total income of confronting arm's length pricing determined by the transfer pricing officer. In order to provide sufficient time, assessing officer to complete the assessment in the case where the reference to the transfer pricing officer, section 92CE provides that determining arm's length prices of international transaction by the transfer pricing officer is like 16 days from the expiry of the time limit, section 153 or 53B, for making the order of assessment by the assessing officer. In many cases, it becomes necessary to seek information from the foreign jurisdiction for the purpose of determining arm's length prices of the transfer pricing officer. At time proceeding before the TPO, transfer pricing officer may also stay by the court orders. Taking into consideration which cases it has been required by assessment proceeding or stayed by any court by reference to the exchange of information has been made by the competent authority. Under the agreement referred to section 90 and 98, the time available transfer pricing officer making the order of executing time, the assessment proceeding, and stage at the time has been received of transaction. As the case may be, the less of 60 days from the remaining period shall be extended to 60 days. A TPO has a power to rectify the order under Section 154. If the mistake has been apparent from the recorder's notice, in such a notification is made, the assessing officer has to rectify the assessment order to bring the confinement to the same. The TPO has exercised all or any of the powers specified in the clause A to D to Section 131 and 133D of 6 or 133A of determining arm's length prices once above reference is made to them. Central government may make a scheme by way of notification for the purpose of determination of arm's length prices so as to impact the great efficiency, transparency, accountability, eliminating the interference between transfer pricing office and assessing or any other person to the extent of technical feasibility, optimizing utilization of the resources through the economic scale and functionality specialization, introducing our term-based determination of arm's length prices, the dynamic jurisdiction section 8. Central government may, for the purpose of giving effect to a scheme, may and act that any of the provision of this act would not apply or would apply to the exception, modification, or operation of the specific. And however, no direction has been issued after 31st March 2024. Every notification shall issue shall, as soon as the notification issued, then laid before each house of parliament. Safe harbor rules determine with arms and prices in the case of international transactions. Section 92 CV provides a definition income and afford Section 91. Arms and price under Section 92 and 92 CE. Subject to the safe harbor rule, Section 92 CB empowers CBDT to enter to prescribe safe harbor rules. Safe harbor rule means circumstance in which income tax authority shall accept a transfer pricing for income deemed to be accrued or raised from Section 9(1)(1), as the case may be declared by the introduction of advanced pricing agreement Section 92 CC and Section 92 CD. Advanced pricing agreements are agreed between the taxpayer and the tax authority on an appropriate transfer pricing methodology set the transfer in a transaction over a fixed period of time in future. They offer better assurance on the transfer pricing method and provide certainty and anonymity approach. Keeping in the mind the benefit of offer of advanced transfer pricing with the APAs, Section 92 CC and Section 92 CD has introduced a transfer pricing regime to provide a framework of formulation of advanced transfer pricing between the taxpayers and income tax authorities. Section 92 CC has enabled CBCD with the approval of the central government to enter into an advanced transfer pricing with any person enter into pricing agreement advanced. The Section 92 CC and Section 92 CB. The arm's length price or the specify the manner in which arm's length price to be determined in relation to the international transaction and to be entered into by the person. Income referred to Section 9(1)(1) specify the manner in which the income should be determined and reasonable attribute to the operation carried out in India by or on behalf of the person being a non-resident. Purpose of APA. APA should relate to the international transaction to be entered into by the person. APA shall be entered into the purpose of determining this. Arm's length price or specified manner in which arm's length price shall be determined in relation to such international transaction. Income referred to Section 9(1)(1) specified manner in which such income should be determined reasonable attribute to the operation carried out in India by or behalf of the person or being a non-resident. They say have a rule relevant assessment notify yet to be notified by CBCT on the date of release of certificate. There is a rules ready for part of the proposed certificate update. Manner of determining of the arm's length price. The manner of determination of arm's length prices of the income tax above may include methods referred under Section 92C1 or any other method provided by the rules made under the Act with the necessary adjustment and variation. Provision of advanced transfer pricing updates not standing anything under the section of Section 92C and Section 92C. In the case of APA has been entered, the arm's length prices in relation to the transaction or the income referred to Section 9(1)(1) shall be determined in accordance with the advanced transfer pricing, notwithstanding any contrary provision contained in Section 92C and 92C. That is, provision of APA shall be override the provision of Section 92C and Section 92C, which is normally applicable for determination of arm's length prices. Validity of APA. APA should also validate its period specified in the agreement, which shall not exceed 5 consecutive revision. Binding nature of advanced transfer pricing. The binding nature of advanced transfer pricing is entered into shall bring into person whose case in respect of the transactions in relation to which the APA has been entered into. The principal commissioner of income tax authorities are subordinate to him. in respect of said person and said transaction. Not binding on APA. APA shall not be binding if there is any change in the law or fact has been bearing on APA. Condition for declare of APA is void ab initio. In the case of board finds that advance transfer pricing is entered into has been obtained by the person by way of fraud or misrepresentation of facts. Boards empowered to pass an order declaring any of the advance transfer pricing is void ab initio. The central upper book central government. The consequence of declaration of APA in void ab initio, result of the declaration of APA in void ab initio. All the provision of the action applying to such persons of APA has been never been entered into. The period beginning and the end of the APA is by ending the date of other declaration APA void ab initio shall be excluding the period of compensation and any period of limitation under the act of such period of exception. Limitation specified as October 3 and 3b in respect of anything contained in the other provision of that. In the case of the period of limitation after excluding the above mentioned period is less than 60 days, such remaining period of limitation shall be extended to 60 days. If an application is made by the person for entering into APA, then the proceeding in respect of which person purpose of the act shall be deemed to be pending. Prescribed scheme of the APA. Code empowers prescribed scheme satisfying the manner prescribed to any other general respect of APA. Prescribe advance pricing agreement scheme for the purpose of section 90cc. Exercising the power of conferred section 90cc, read the section rule 295 of income tax act 1961. CB has a prescribed through CB has a prescribed rules to specify the advance pricing agreement APA schemes. Such important provision schemes brief the person eligible to apply the rule section rule 10G. Any person who has undertaken international transaction or is contemplating to undertake an international transaction shall be eligible to enter into agreement under this rules. Pre-filing consultation section 10. Any person proposing to enter an agreement under the rules made by the application writing made request of pre-filing consultation in the prescribed form in the Director General of Income Tax International Transaction. Pre-filing consultation shall, among the things, determine the scope of agreement, identify the transfer pricing issues, determine the suitable international transaction for agreement, discuss the outcomes or arrangement. The rule prescribes a scheme entered into the advance transfer pricing for the purpose of determining income referred to the section 9 1 class 1 as a man as may set the income to be determined as a reasonable attribute is the operation carried out in India by or behalf of that person being a non-resident yet to be notified by the CBCD as the data of the release of certificate. So rules of notification will be part of the web posted with certificate updates. The pre-filed consulting shall not binding the board and the person to enter into the agreement or initiate the agreement process not be deemed to be made by the person is applied to entering into the agreement. Application of advance pricing agreement section rule 10A. Any person who is eligible to enter into agreement and if he desires to enter into agreement, furnish an application in prescribed form along with the proof of payment of requisite fees is necessary to the Director General of Income Tax International Transaction. In the case of unilateral arrangement to the competent authority in India, in case of bilateral, multilateral arrangement, the application will be filed at any time. Before the first time of first day of the provision previous year, relevant to the first assessment year, for which the application is made, with respect of the transaction which is continuing nature of dealing with that is already occurred before undertake the transaction respect of the money transaction. Section 5. The X by ZP number as supplying goods to associate enterprises in foreign country. It is applied for advanced pricing agreement in respect of the transaction of with an assessment officer. This is appropriate advanced pricing agreement is filed 15th March 2023 and the APE is signed on 2nd June. Discuss for which previous year as will be offered. So XYZ has filed an advanced pricing application in respect of transaction with the associate enterprise or continuing nature for dealing with already occurred. Since application is filed 15th March before 1st April 2023, the APA would be applicable for the previous year 23-24. Application fees. Application has to be accompanied to proof of payment of fees as given below. Amount of international transaction entered into or prescribed to be entered in respect of which arrangement is proposed during the purpose of doing. The amount is less than 100 crores, fees 10 lakh. Amount is greater than 100 crores, does not exceed 200 crores, 15 lakh. Amount is greater than 200 crores, 20 lakhs fees. Withdraw the application agreement. The application may withdraw the application of the applicant may withdraw the application of the agreement as any time before the finalizing the terms of amendment. However, the application fee paid shall not be refunded or withdrawn on the applicant by the application of the approval of central government. Agreement shall be entered into by the board with an applicant after the approval of the central government. Terms of the arrangement section 210. Arrangement may along with other include international transaction covered by the arrangement, agreed transfer pricing methodology if any, determination of arms and prices if any, the definition of any relevant terms be used in agreed transfer pricing methodology, determination of arms and price. Crucial assumption, that is the factors or assumptions that are so crucial and significant that neither party enter into the agreement will be continued to go on by